All right, let's jump right into your market lens for the week ahead. It feels like we are standing at the absolute epicenter of a financial earthquake. Why? Because two of the world's most powerful central banks are about to make their moves. And believe me, the aftershocks are already rattling markets from Tokyo all the way to Toronto.
And it all really boils down to this one critical question. You've got these two massive meetings that are about to set the agenda for, well, everything. So how is this going to play out across gold, the euro, you name it? In this Forex Flash, we're asking, what happens next? Let's dive in. Okay, so at the center of the ring, you got these two heavyweights. In one corner, we have the US Federal Reserve, and in the other, the Bank of Japan. Seriously, what they decide to do next is going to set the tone for the entire global economy. No pressure, right?
And just so we're all on the same page, whenever you hear someone talk about the Fed, what they're really talking about is this group, the FOMC. These are the folks who literally control the interest rate for the US dollar, and a single decision from them sends massive ripples into every corner of the financial world.
Now, this is where it gets really, really interesting. The US Fed is pretty much expected to cut interest rates. The big mystery isn't if they'll do it, but how deep and how fast they'll go. Are they going to be dovish and signal more cuts? Meanwhile, in Tokyo, the Bank of Japan is feeling the heat to do the complete opposite, to finally raise rates. You've got two giants on a potential collision course.
So where's the first place we're going to see the tremors from this showdown? Right here, in precious metals. The Fed's next move for the dollar is turning gold and silver into a real battleground, and you can already see the lines being drawn.
It really feels like gold is just holding its breath. We've seen a little rebounds, but what happens next is all up in the air. Because it's not the rate cut itself that matters. The market's already baked that in. No, it's all about the language, the tone. Are they hinting at more cuts, or is this just a one-and-done deal? That's the billion-dollar question, and you can bet silver is right there with it, on a very fragile recovery.
And you don't have to look far to see this tension playing out in real time. You see headlines like this one. The bulls, the investors betting the price is going to go up, they aren't waiting around. They are making their moves now, trying to get position before the big announcement drops.
So let's talk numbers. This is the battlefield, all mapped out. Analysts are watching these levels like hawks. Think of support as the floor, a price point that traders are really hoping holds strong. And resistance up top, that's the ceiling it needs to punch through to keep climbing. The Fed's words are what's going to decide if we bounce off the floor or smash through the ceiling.
This means traders are basically getting ready for two totally different outcomes. If the Fed sounds dovish and hints at more cuts, you might see traders go long and bet on gold prices to soar. But if Chairman Powell comes out sounding hawkish and tough on inflation, they could flip the script completely, go short, and bet on a price drop, especially if that support floor we just talked about gives way. Okay, let's flip over to the other side of this puzzle, the Bank of Japan. The pressure on the Japanese yen is just immense right now, and the entire market is on red alert, watching for any sign of a policy shift or maybe even the government stepping in directly to prop up the currency.
So when you look at the US dollar versus the yen, the general vibe is that there's not much room left to go up. And why is that? Because the threat of the Bank of Japan doing something is acting like a lid on the price. And this isn't just a dollar story. We're seeing technical red flags pop up elsewhere, like this double top pattern against the British pound, which is a big warning sign for traders.
And here's the proof in the pudding. This market analysis basically says it all. The pair is capped. Nobody wants to make a big move until they hear from both central banks. The market is effectively frozen, just waiting.
So how might someone actually trade this? Well, here's one playbook analysts are looking at. The strategy is called sell the rallies. In plain English, that means if the dollar gets a little pop of strength against the yen, that might be the exact moment to sell. They've got their entry zone mapped out, a safety net in place, and their profit goals. It's a fascinating look into how the pros think. But look, this story is way bigger than just the US and Japan. The push and pull between these two is sending a massive domino effect across the globe. Let's start with Europe, because they're already feeling the waves.
Over in Europe, they're kind of getting hit from two sides. You've got the huge Fed decision hanging over everyone's head, but you also have local economic pressures, especially in the UK, that are making things extra tricky.
And these are the key numbers everyone's watching for the euro and the pound. See that word heavy next to the pound versus the dollar? That's trader speak for some serious downward pressure. It really seems like the UK's own economic problems are weighing it down, while the euro is actually starting to win the tug-of-war against its British neighbor.
This headline just nails it, doesn't it? While the whole world is watching the Fed for the pound, the real damage is coming from inside the house. It's the UK's own struggles with its budget and inflation that are really hurting it right now, and that's giving the euro a major leg up in this particular fight. And hey, let's not forget, it's not just the Fed making news this week. Just a few hours before their announcement, the Bank of Canada is also expected to cut rates. So some people are gearing up for what they're calling a double-cut day in North America. For the US dollar against the Canadian dollar, this level right here is everything. It's the line in the sand. And which way it breaks is likely going to be decided by that 1-2 punch from the Bank of Canada and the Fed. This could set the tone for the loonie for weeks. Okay, for our last stop, let's head down under, where a surprise inflation report has just thrown a massive curveball into the mix. This has totally changed the game for the Aussie dollar, and it's a great reminder that local data can still pack a huge punch. I mean, this is a perfect example of how fast a story can change. This inflation report came in way hotter than expected, and now traders are scrambling to rethink when Australia's central bank might cut rates. All that newfound uncertainty is pouring fuel on the fire for the Aussie dollar, especially against the yen. So wow, that is a lot of moving pieces, right? How do you put it all together into some kind of coherent strategy? Let's wrap up with one last Forex flash scenario that analysts have their eyes on. And it's all about that surprisingly tough Aussie dollar. So here's the logic. Australia's strong inflation is giving the Aussie dollar a really solid foundation. Now, if the US Fed comes out with a dovish message, that could weaken the US dollar. So what do you get? A strong Aussie and a weak US dollar. That's the perfect recipe for a potential trade, and analysts are watching to see if any temporary dips are a buying opportunity. And all of this brings us to one final thought. In a world where trillions of dollars hang on every single word from a handful of central bankers, is uncertainty the new certainty? It's definitely a question worth thinking about. Thanks for tuning in.